The stock market is a roller coaster, and this week was no exception. Just when it seemed like the Dow Jones Industrial Average, DJIA, was on the cusp of making history with its first record high of the year, it fell just short. But here's where it gets intriguing. While the Dow flirted with greatness, the broader market told a more nuanced story. On Friday, U.S. stocks ended the day in a mixed state. The Dow managed a modest gain of 35 points, 0.08%, but the S&P 500 dipped by 0.29%, and the tech-heavy Nasdaq Composite slipped by 0.4%. This divergence highlights the ongoing tug-of-war between optimism and caution in the markets. And this is the part most people miss. The Dow's struggle to reach a record high isn't just about numbers. It's a reflection of deeper economic currents. Earlier in the day, the Dow had briefly surpassed its previous intraday record set on December 4th, but it needed a gain of roughly 103 points, 0.23%, to officially close at a new high. Now it's just 68 points, 0.15% away from that milestone. But why is this taking so long? Well, the S&P 500 and Nasdaq have notched 18 and 19 record highs this year, respectively. The Dow has been playing catch-up. This disparity raises questions. Is the Dow lagging because it's a narrower index, or are there specific headwinds holding it back? One factor weighing on the market was the University of Michigan's Consumer Sentiment Survey, which showed a 5% drop in August, the first decline in 4 months. Inflation worries are clearly on consumers' minds, and this could spell trouble for economic growth. But here's where it gets controversial. Despite these concerns, Wall Street remains optimistic. Why? Because investors are banking on a Federal Reserve rate cut next month, which could fuel further market gains. But is this optimism warranted? Or are investors overlooking potential risks? A key driver of the Dow's recent performance was UnitedHealth, UNH, a major component of the index. Its shares surged 12% after Berkshire Hathaway, BRKB, revealed a stake in the healthcare giant. Yet, UnitedHealth's shares are still down 40% this year. This highlights the uneven recovery within the index. Some companies are thriving, while others are struggling. Is the Dow's performance a true reflection of the economy, or is it being propped up by a few winners? The broader market has been buoyed by strong corporate earnings and investor enthusiasm about AI. Earlier this week, stocks soared after July's Consumer Price Index CPI data showed inflation rising in line with expectations, easing fears of a hotter-than-expected number. For investors, the fear was that an even hotter number would remove the prospect of a September rate cut altogether, noted analysts at Deutsche Bank. But the relief was short-lived. Thursday's Producer Price Index PPI data showed wholesale inflation rising at its fastest pace in 3 years, casting doubt on the Fed's rate cut plans. Are tariffs exacerbating inflation? And what does this mean for the Fed's next move? Despite these uncertainties, investors remain focused on robust corporate earnings and the potential for a Fed rate-cutting cycle. A rate cut can lower bond yields, making stocks more attractive and encourage spending. But it's not all smooth sailing. Volatility has dissipated, with the CBOE Volatility Index hitting its lowest level this year. But geopolitical tensions and trade policies continue to loom large. This year has been a whirlwind for the U.S. stock market. In early April, the Dow was down 16% from its December peak, on track for its worst April since 1932. But President Trump's decision to pause his Liberation Day tariffs lifted stocks out of their slump. Since then, the S&P 500 and Nasdaq have hit record highs, while the Dow has been on a slower but steady climb. Is Trump's trade policy a blessing or a curse for the markets? The Dow's journey is far from over. On July 23rd, it closed just 4 points shy of a record high before pulling back. Companies like NVIDIA, NVDA, Boeing, BA, Goldman Sachs, and Microsoft, MSFT, have been driving its gains, while UnitedHealth, Salesforce, CRM, Merck, MRK, and Apple, AAPL, have weighed it down. This contrast underscores the index's evolving composition, a reflection of the U.S. economy's shifting priorities. Established in 1896, the Dow has been a symbol of American capitalism for over a century. While it tracks just 30 companies, far fewer than the S&P 500's 500, it remains an iconic benchmark. It's the sentimental favorite because it's the oldest, said Sam Stovall of CFRA Research. But is sentiment enough to keep it relevant in today's fast-paced markets? As we look beyond U.S. shores, it's worth noting that global markets are also hitting highs. Japan's Nikkei 225 and the MSCI All-Country World Index both reached record levels this week. Is this a sign of a global economic recovery, or are we overlooking cracks in the foundation? The stock market story is far from over. As investors, we're left with more questions than answers. Will the Dow finally clinch its record high? Are rate cuts a done deal, or will inflation surprises derail the Fed's plans? And most importantly, what does all of this mean for the average investor? The only certainty is uncertainty, and that's what makes the market so fascinating. What's your take? Do you think the Dow will hit a record high soon, or are there too many headwinds? Let's discuss in the comments.